Good afternoon and welcome to Effective Financial Management. This is a session specifically for federally funded parent centers such as PTIs and CPRCs. My name is Courtney Salzer. I am the co-director of the Region 4 PTAC, the Parent Technical Assistance Center. We are housed in Wisconsin at the PTI here in Wisconsin. Our agency is Wisconsin Facets. Just a brief note about myself. I, like many of you who will be listening to this, and am the executive director at Wisconsin Facets. I'm also the co-director of our PTI here in Wisconsin. So I can assure you that everything you're going to hear today is coming from learned experience, things that I've personally wrestled with related to finances, and I'm really excited to share some of those lessons with you all today. I have a co-presenter today, and she's going to introduce herself now.
Hi, I'm Debbie Tucker, and I am with the Region 3 Technical Assistance Center, and we are housed in Parent-to-Parent, Georgia, and we serve as the PTI for the state of Georgia. And within the organization, I am the CEO, and much like Courtney, what we're going to discuss today are really critical aspects that will make your organization stronger, but please also know that most of our experiences come from mistakes that we've made, lessons that we've learned as we've dealt with financial issues. So take that all with the anytime you're dealing with financials, you really want to make sure that your eye is on them and there's a constant attention to it. But mistakes do happen, and this is just a way to make sure you have enough set up and enough of an understanding where you can hopefully avoid many of those mistakes.
Great. Thanks, Debbie. All right. So just a note of caution before we proceed. Whenever you're talking about finances, boy, there are a lot of tentacles under that umbrella of finances, and sometimes things can be complicated. Sometimes they're going to be issues that probably need a deeper level of looking into and of advice and technical assistance. So we're just urging you that as you go along the course of leading your parent center or your nonprofit, that this session not be the only professional development that you do on the matter of nonprofit finances. With our time today, all we really have the ability to do is scratch the surface, give you some general ideas of areas and aspects of nonprofit finance that you need to be aware of. We might leave you with more questions than what you came with when you started the session, and that's okay. Questions about finances, questioning policy and practice, those are important pieces to making sure that your organization remains healthy and transparent. So on this slide here, we've laid out what Debbie and I believe are kind of the 5 essentials for managing the money at your parent center. These are also kind of going to serve as a roadmap for where our session is going to take us today and some of the overarching themes that we're going to cover. So we want to make sure that you know that there are some financial requirements that are imposed upon you as a grantee of the Department of Ed. We want to make sure that your center understands how critical it is to have clear policies and procedures and really strong internal controls. And we're going to talk for a good number of slides in just a little bit about what internal controls are and try to give you some ideas of places where you might want to really look at inserting or changing up the internal controls you either have or need to have. We also want to make sure that you leave understanding how important it is to continually, to regularly monitor the financial conditions at your parent center. Setting up strong policy and procedure and internal controls is really only half of the equation. You also, once those policies and procedures and protocols are set up, you need to establish kind of a regular schedule for who, what, and when those financials are going to be reviewed, both by your staff and by your board. That leads us to the next concept, which is the boards at your parent centers and your center leadership have to really be trained in understanding what financial reports are necessary, what data and information should be specifically looked at and questioned in those financial reports, and really have an understanding of what it means for your organization to be financially healthy. And last but not least, what we want to leave you with is just the idea that you're not alone. You have a technical assistance provider that, as Debbie mentioned, has likely either dealt with any particular question or issue you may have themselves, or they've certainly assisted other centers with an issue probably very similar to what you're experiencing. So don't be shy about contacting your TA provider. Okay. So first, I just want to very briefly touch on some of the financial matters that, because you have a grant from the Department of Ed, you have to be cognizant of. And there's a separate session that deals specifically with the uniform cost principles. That's where a lot of this information comes from. If you haven't already viewed or listened to the session on the uniform cost principles and guidance, we highly, highly advise that you do that. And this is not an all-inclusive list, but just some of the things that regularly come up for parent centers that you need to be cognizant of. It's the first item is the notion of allowable costs. And the uniform guidance is very, very clear about what it takes for something to be an allowable cost that your grant is able to spend grant dollars on. Basically, the cost has to be necessary, it has to be reasonable, it has to be allocable, and you have to document that cost. Just a kind of a tangential note on allowable costs. In the past couple of years, there's been an increase in the scrutiny that is done on costs related to meetings, so meeting space, and food and refreshments being offered at those particular meetings. In fact, there's very specific guidance that has been given that it's really going to be critical as your parent center looks at hosting, parent trainings, conferences, other types of meetings. What for those meetings are going to be allowable costs? In the uniform guidance, there's also important information about an indirect cost rate. Again, we're not going to go into really any amount of detail on this, but if you aren't already aware, it's something you want to look into. What indirect costs are you allowed to take as a grantee from OSEP, and how do you establish a rate with the government if that's something that your agency is interested in doing, which is taking indirect cost on your grant dollars. You'll also find information in the uniform guidance on the audit requirements. You need to know what the threshold is for when you have to have an audit and what type of audit you are required to have. We're going to talk about that later in the presentation. It's also important to understand the rules around capital purchases. And last but not least, really understanding what your obligations are with regards to record retention. Most states have their own laws specifically dealing with record retention. In most instances, those are um, relatively lenient. However, you should know that in the uniform guidance there are very specific records retention requirements that oftentimes require you to do much more than what your individual state requires in terms of which records you keep and for how long. So again, we're not going to talk in great detail about any of these. All of this information can be found in the uniform guidance, and the session on uniform guidance goes into detail about all of these issues. All right, so that being said, it's, I think, very important, even for well-established nonprofits, to think about, at least on an annual basis, how is the overall financial health of our organization. There's a lot of ways you can go about doing this. What we've highlighted on this slide is one really simple, easy-to-use tool that you can use to do an annual review or an initial review of the financial health of your organization. I will just very briefly show you what this assessment looks like. It's brief. It's 20 questions. You can walk through this with your board. You can walk through this as a leadership team. You can do this together. Our recommendation is that you look at walking through some type of assessment at least on an annual basis. And I think there certainly aren't right and wrong answers on this assessment, but what we would suggest to you is if in particular, if you or your board are checking a lot in this unknown category, that's probably going to tip you off that there is definitely the need for either some more professional development or for you guys to start talking about finances on a more regular basis. Again, not a required tool, just something that we found to be quite helpful. Just very brief, a few notes about policy and procedure. What we've laid out for you are kind of, if there is a gold standard for those overachievers who are listening that you would want to subscribe to, it's really good best practice to have a financial manual. This sounds daunting when you first tell people that. So what we've done is we've linked you to a template that's available for free through Blue Avocado. It's a template that can be customized specifically to your organization, and that template really kind of lays out for you some boilerplate language about various aspects of finances that should be contained in a financial manual. So the gold standard would be to have a financial manual for your organization that is reviewed and updated on an annual basis. That being said, if you're not to the point, if you're brand new and starting out, if you're brand new in your role, and right now you just need to make sure that you've got the minimum kind of policies in place to make sure that your organization is going to be protected, we've laid out a list for you of policies that we believe you should have something on the books about. Very quickly, those are bank accounts, credit cards, cash management, investments, allowable costs, expenses, capital purchases, record retention, employee reimbursement, and paying vendors. So again, this isn't an all-inclusive list. However, at a minimum, each parent center should have a written policy and procedure on the books for those types of issues. When we're talking about policy and creating policy, our suggestion is that every policy that you're either writing or rewriting or reviewing, what you need to make sure that policy does is first and foremost, it has to ensure that your assets as an agency are being properly cared for. Second, you need to make sure, and this is kind of getting into those internal controls, you need to make sure that if there are multiple tasks that need to be done with a particular financial issue, that you're not giving all of those tasks to one specific person. And that's probably for obvious reason that while none of us have the intention of ever employing someone that has it in their mind to, to defraud or steal from an organization, it certainly has happened. It's happened to a lot of nonprofits. It's happened to parent centers. So it's really critical that you've divided the responsibility so you have more than one set of eyes and hands on your various financial tasks. And lastly, your policy, you should make sure that it has some language in it to make sure that anyone who should be privy to this type of financial information has access, whether that's your board, whether it's your funders. You have to make sure that you are ensuring transparency of the financial ongoings of your organization.
Courtney, before you go on, I want to mention something around that dividing your duties up among multiple people.
Sure.
Particularly for CPRCs, we know that this is incredibly challenging. You might be staffed by 2 part-time people at best. This is really where your PTACs can be really helpful in helping you think of how you can really set up still strong internal controls. That might at that point involve including some of your board members in those processes. But there's still a way, no matter how small your organization is, to ensure that you have responsibilities divided up among people to make sure that there is transparency in your policies. The last thing any organization wants is any sort of allegation of fraud or mishandling of anything financially related. So dividing up your responsibilities is really a critical key aspect where you can show that there is transparency and fidelity in the things that you're doing. So no matter how small you are, these are still things that you're going to need to have in place.
Absolutely. Thanks, Debbie. And that's actually a perfect segue into some of the slides we have about internal controls. And I think the best way that we found to describe what internal controls are and what they mean is to use the analogy of a child flying by themselves. If you've ever spent any amount of time in airports, you've undoubtedly seen unaccompanied minors who are flying by themselves. Maybe they're off to see grandma, they're heading to summer camp, they're shuttling between parents who live in different states. Airlines, in order to protect both the child as well as themselves, the airline have very elaborate procedures in place for handling these children. And, it starts from the time that the parent checks that child in. Then we've got a gate agent involved. We've got flight attendants involved. Basically, they are scripting out who should be responsible for that child at every step in the process, from the time the child really arrives at the airport and is checked in to the time they're handed off to grandma once they land at their destination. Every movement and handoff is tracked, and if the system fails, as it rarely does, it's pretty big news. There's a lot at stake. So when we talk about financial controls, I think it's important and it might be useful to think about all the ways your organization can receive or hold or spend money. And we're talking about grant payments, bank accounts, credit cards. Think about that in terms of those funds being your unaccompanied children, your unaccompanied minors flying through your organization. Without the appropriate procedures and without different people being designated and engaged throughout the process, I think you could see how easy it would be for money, for agency monies, to either be misdirected or, worst case scenario, to be embezzled or fraudulently taken from the organization. So that's our analogy about internal controls. A more specific definition, internal controls are safeguards that your nonprofit can employ to ensure that financial transactions are properly authorized, appropriated, executed, and recorded. So again, those are the kind of the steps in the process that you need to make sure your policies and procedures track. How these funds are authorized, appropriated, executed, and recorded. There's really 4 types of internal controls that we're going to talk to you about. We've got authorization and approval, documentation and recording, the notion of physical security, and then I think the piece that oftentimes is missed by a lot of organizations is having some policy and procedure related to early detection. So let's start with authorization and approval. And Debbie, I know at your center you guys have done a lot of work on internal controls, so feel free to jump in here at any time with suggestions or tips. But authorization and approval internal controls need to define the who, the what, the when, and the where of financial transactions. A lot of times you'll hear this referred to as segregation of duties. These, the policies and procedures that you write and adopt related to this need to be very explicit about who has decision-making responsibility. The other note that I would just share with you that isn't on the slide, we've seen a lot of policies over the years that have been written and they're person-specific. So Courtney will open the mail. Debbie will document the checks that came in for the day. Jan will write up the deposit slip. The problem with those being person-specific is that oftentimes either people leave an organization, new people come on, people's responsibilities change, and the policies are then instantaneously outdated. So what we recommend is that you designate who, which role in your organization. So the executive director, the receptionist, the board treasurer, go role specific, not person specific. Some things that you should consider with regards to authorization and approval, who signs your checks? I think a lot of us, I know here at our organization, we require every check be signed by 2 check signers. The other note I would say about this is if you are going to require 2 check signers, don't just designate in your policies the 2 roles that have authorization to sign, because if it's the executive director and the project director and one of those 2 individuals is out on an extended leave or on vacation, your hands are going to be completely tied in terms of getting, paying your bills, writing your checks. We here at our organization have 4 individuals that have check signing responsibility, including 1 person from our board of directors. You also need to consider who's going to receive the money. When money is either dropped off at your office, mailed in, if it's called down through an electronic debit system, who has authority to receive the money? Who deposits that money? In particular, and I don't think we deal as much with cash as we used to, but if your organization has a fundraiser each year, you are going to have potentially and hopefully a significant influx of cash, hard cash. How are you going to handle that? We talked about who has the authority to write the checks, not just who signs them, who writes them. It shouldn't be the same person. And I think that's probably obvious why you wouldn't want the same person being the one writing the check as the same one who gets to then sign the check. Who reconciles your bank statements? At what threshold is greater approval required? If you're a very, very small organization, and your budget is extremely tight, you have a single source of funding, you may want to have procedures in place that if a check over $500 is generated, you've got to have more signatures. For larger organizations, oftentimes it's $1,000 or $1,500. But think about that. If having a $1,000 check issued out of your account is going to have a pretty significant impact on your bottom line and your available cash, you want to make sure that you have a greater level of oversight when those larger checks are being cut. Who can authorize purchases, and in particular, purchases of a significant amount? Who draws down your funds? Who prepares and reviews your financial reports? Again, this is not an all-inclusive list, just some things that you should think about with regards to authorizing and approving expenses and monies.
And my comment on this, Courtney, is that a lot of this can be very individualized to your center. So you heard Courtney say that every check that comes out of Wisconsin Facets has 2 signatures on it. That is not the way Parent to Parent of Georgia operates. We have a single signature, and our threshold for a second signature isn't until it's over $20,000. And I'll tell you that we have changed and fluctuated that amount over time. But for us, as we've become a larger organization, to have a double signature on checks under that amount, we realize slow down the operations of the center. So an instance that I'll give you is our health insurance check that we pay for employee health insurance every month is $18,000. If every time we cut that check, which is just a recurring monthly bill, we had to get a second signature, that would slow down the operation. So a lot of this is about reason, but you do have to make this fit within the operations of your organization. So when you take samples that are given to you or you hear samples that are said, don't think that that's the be-all, end-all. What you want to make sure is that you have procedures, and these are the things that you're considering as you're writing your policies and procedures.
Absolutely. And if you are, especially if you're a new center and you're kind of struggling with, you know, for our size center, what might be the best way to frame something or the best protocol to put in place, I would urge you to contact your TA provider. We've had a lot of experience helping very small centers all the way up through larger centers, and we can certainly share with you, you know, a perspective on perhaps what other centers of your center size might be doing. The next slide, not going to spend a whole lot of time on. This is just one example that we found that is very, I think, simple and straightforward. When you're thinking about segregating duties, the who is going to do the what, here's just one template you might want to use or just use for kind of food for thought in terms of all the various steps. And again, I want to reiterate what Debbie said earlier about the fact that we understand that some centers in the Parent Center Network are very, very small. You maybe have 2, 3 staff people, but you all have a board and you all have officers on your board, and it is very accepted practice to involve your board in some of these responsibilities to make sure that you are not placing too much discretion with one individual person. All right, we've got a case study here, and you know, normally when we do case studies, this is a great place to get the audience involved, but because this is a recording, for this case study, Debbie's going to be my audience participator. So we've got XYZ Parent Center. They're very small. They only employ 3 staff people, the project director, a very part-time trainer, and a business manager. And this business manager does the finances, answers the phone, and does other clerical work. So when checks from donors or funders are sent to the office, the business manager opens the mail. She prepares, or he prepares, the checks for deposit. And then since the bank is right on the business manager's way home, she also deposits the checks at the bank each day. she tries to always send, this is the business manager, she tries to always send an email to the project director to let her know that she has deposited a check. But sometimes just the course of life gets in the way and she forgets when she gets home. This isn't considered a big deal because the project director will be able to see the incoming funds in the monthly financials that the business manager prepares for her or him. So my question to Debbie is, what is wrong with this situation? Because there are some things wrong with this situation. And then what internal controls could they maybe put in place to avoid some of the mistakes here?
Well, to me, the biggest thing that I see wrong in this situation is that one single person is handling everything related to the financials without any checks and balances in place. So we go back to that slide and think about approval and authorization. Look at this business manager. This business manager is opening all of the mail. This business manager prepares the deposits. This business manager makes the deposits. And then this business manager handles all of the financials and is preparing things for the project director. So the instance that I would say would to sort of illustrate this is, let's say that $1,000 check comes in, and inadvertently it's a donation check from someone, and inadvertently they forget to put XYZ Parent Center in the payable line on the check. So it is a wide open check. This business manager goes, hey, I just had a plumbing leak in my house. I could use an extra $1,000 right now. She takes that check and makes it payable to herself and deposits the check. You can see where this could cause some major issues within your organization. And yes, that's a stretch. We all sort of laugh and giggle and go, no, our business manager would never do that. But you can see without those internal controls in place how things could happen. So one of the things could be that the project director opened the mail. It could be that the board treasurer came in and prepared the deposits for the business manager to then go do. It could be that at the end of the month when that bank statement comes in, that project director is checking that across all deposit slips to make sure that everything lines up. There's a lot of different controls that could be put in place. You have a very part-time trainer. That may or may not be an extra person that could help with this, but it certainly could. You might not need to make deposits every day, so maybe the trainer is the one making the deposits just when that trainer is available. But there's a lot of different people that you could pull in to add levels of control with this case study. How did I do, Courtney?
You did great. You did fabulous. And I think you highlighted all of the critical pieces, but I just want to very quickly talk about the last thing you mentioned, which was the use of the part-time trainer. I think a lot of times people get it in their minds that only people with some type of financial background or responsibilities for financial management of the organization are the only ones that can be involved with the internal controls. And while certainly you wouldn't want your trainer preparing your monthly financials, unless of course that trainer also moonlighted as a bookkeeper or accountant, having the trainer serve some capacity in these internal controls, if it's reasonable and can work given that they're part-time, is a great idea. Just because you don't have a financial background doesn't mean you can't be the person to sign off and witness that the money came in, or you can't have them do the deposit or some other function related to the internal controls. So particularly if you're a small center, don't just think about your accountant and your ED or your project director. Think about anyone who is employed at your center or is responsible for the leadership of your center, like your board members.
And one thing, Courtney, that we didn't mention, a lot of times smaller parent centers, well, parent centers in general, but particularly smaller ones, will outsource and they will have a fiscal agent that handles it. you are still obligated as the federal grantee to make sure that all of this is in place. So you are not going to be able to just wash your hands and go, oh, I contract this out with ABC organization 4 blocks down the road. You still have the obligation legally to make sure that all of this is in place and those financial controls are in place.
That's a great point. Absolutely. All right, so let's talk very briefly about documentation and recording. And well, I was going to say these are about the least sexy internal controls. I'm not sure that there are really any super sexy internal controls, but a lot of times, you know, we're very concerned with, you know, the segregation of duties, but then we kind of forget about how important it is to have policy and procedure in place related to documentation and recording of expenses and transactions. So things that you should consider when you're looking at or initiating for the first time some policies on this, think about the role that invoices need to have. If you are purchasing anything, there should be some form of backup documentation. What is acceptable backup documentation for you? If you're and that kind of leads into the next one, you know, receipts for expense reimbursements. Most of us, at some point or another, our employees will be requesting reimbursement for some form of expenses that they've incurred. What is going to be acceptable to you in order for you to be able to process their reimbursements? Documentation attached to check request forms. And again, this is something that might be just specific to certain organizations here at Facets. Anytime a check needs to be cut for something, we need to have some documentation as to what that expense is. So we need our backup documentation, and then where that expense needs to be allocated. If you're in a situation where your center has multiple grants, and let's say you are buying toner cartridges for your copier, and that copier is used to make copies for all of the various grants you have, that needs to be indicated somewhere that expense is to be split and not just singularly allocated to one particular grant. And last but not least, and again, this is something that I might be just specific to certain centers, but boy, really critical when you're talking about drawing down your PTI or CPRC funds, that you have some documentation that that's happening, because believe it or not, we have had centers that have gone the entire span of their grant and never drawn a penny of their money down. Which means they probably have lots of other sources of funding that can float them. But you need to have documentation, A, the drawdowns are happening, and B, what the expenses are that are related to that drawdown. In the uniform guidance and in the session that deals with uniform guidance, they cover the 3-day rule. You know, any money that you draw down has to be spent out. It has to go back out of your account within 3 days of being received. So you need to make sure that you've got expenses that justify you drawing down those funds. Okay, physical security. Again, especially in the era that we're living in, it's really, really important to make sure you are not just thinking about, you know, the checks and the cash that are coming in. You need to make sure that only those individuals who are authorized to have, you know, physical or indirect access to your documents, your computers, your checks, you need to look at who is going to have access. And who are you going to block access from? So a few things to consider. First of all, if you are still using paper and pen checks, where are they stored and who has access to them? What types of passwords are you using to protect your financial information, and who has access to those passwords? Are the passwords changed regularly? When they get changed, are those changes being communicated so that if your, oh, we always do the morbid if I get hit by a bus thing, but if your accountant gets hit by a bus and they've changed their password and you have no clue what it is, you can't get into QuickBooks, you can't get into anything, that's going to be a problem. So communicate those password changes. How frequently are checks and cash that come into your office deposited? We've known centers that have sat on incoming monies from donors or from funders for months at a time. And I will tell you, there is nothing that's going to probably irritate your donors and funders more than writing out a check to your organization and not having it cashed for 90 days. What that communicates is not only that you don't care about their money, but that you obviously don't need it very badly. And last but not least, which could be an entire probably session on its own, is the whole notion of company credit cards, if you have them. What protocols are you going to put around the authorization of and usage of those credit cards to make sure that you are avoiding any fraudulent behavior that could go on with those?
All right.
Okay.
We've got another case study that we're going to now do, and this time Courtney gets to be our responder. So ABC Parent Center is a long-standing center that is generally considered to have very strong internal controls. They have moved almost all of their financial operations to be paperless and have developed complex passwords to hopefully prevent their information from being stolen or hacked. Pursuant to their internal controls, only select few, including the financial manager and the board treasurer, have these passwords. So when a new board treasurer or financial manager are onboarded or hired with the organization, they are provided these passwords and required to sign a confidentiality agreement that, amongst other things, that they will not disclose the agency passwords. So despite the controls in place, do you think that their financial information still could be at risk? And are there other controls that could be in place?
Well, I would start by saying I think that ABC Parent Center is doing a few things correct. I think that the fact that they have, complex passwords is a good thing. We don't want ABC Parent Center to use 123 as the password for all of their financial information. I think that it's good that they've designated who are the select few who will have access to those passwords. I think it's good that they've identified someone from the staff as well as someone from the board to have access to those passwords. So I think up until that point, they're doing pretty good. Where I see the problems happening is that, at least the way this case study reads, those passwords don't appear to be changing because when they're bringing a new board treasurer or financial manager on, they appear to be given the same passwords that they had and that the people who were in those positions prior to them had access to. If those passwords aren't being changed regularly, we all know that just from our personal dealings with passwords, that can make them ripe to be hacked. But the other issue is that presumably without changing those passwords when new people are onboarded, it means the previous people will still have access to all of that information. And while we hope that the previous board treasurer and financial manager are no longer in those roles simply because they've moved on to something different with the organization, perhaps you had to fire the financial manager. Perhaps the separation wasn't on a good note, and now that person is still retaining access to some of the most critical information for your organization. So to me, that's the biggest problem that I see is the lack of changing the passcodes regularly and certainly at a minimum when you are bringing new people into those roles. The other issue that I would identify, I think it is probably, if this is a long-standing parent center, I'm going to make an assumption that They likely have more than just a financial manager and a board. So, think about maybe having one additional person have access to these, maybe the CEO or the executive director or the project manager. It makes me a little uncomfortable just knowing that the only staff who's there on a daily basis, and sometimes we need those financial passcodes on a daily basis, that the only person is the financial manager that's on staff. I just wouldn't want this center to find itself in the position where the board treasurer is traveling for their day job. Your financial manager is out ill, and now you can't get into QuickBooks, and you have no idea what your checking account balance is. So those are my suggestions.
I actually have another one, because I will tell you that as a leader of an organization, cybersecurity scares the heck out of me. And in today's day and age, we hear about it all the time on the news. So let's imagine that this financial manager had logged into the checking account and was doing some work and got a call that her child was sick at school and she had to leave. She closes her computer, throws it in her bag, gets in her car, goes to the school. While she's in the school signing her child out, someone breaks into her car and steals that computer. They pop open the computer, and because she did not log out of the bank account, they now have full access to the bank account right there through her computer. So when you're thinking about setting things up and you're doing it paperless and you're doing it through the cloud or just through login systems, protecting those passwords becomes even more critical. You have to be sure you have policies and procedures in place about logging out and getting out of things. Here's another thing to consider. When I open up my computer and I go into Chrome, even when I'm just logging into my email and I enter my password and I hit enter, this little pop-up box in Chrome pops up on the right-hand side of my screen and says, would you like Chrome to remember this password? Well, it's my computer. No one else is logging into it. I click yes. But what if the financial manager did that? What if the board treasurer did that? And once again, it got stolen. What if they're doing it on their cell phones and their cell phones get stolen? So when you're going to go to just paperless and you're going to rely on computers and cell phones to get things done, which, let's be honest, it certainly helps and is efficient, you have to make sure that your internal controls do truly protect your center. So not to freak you out, but I do think that as the world evolves, cybersecurity is going to become increasingly important for us within our organizations, particularly when we start doing financials more through computer systems than paper systems like we've done in the past.
Absolutely.
So now that I've freaked everybody out and hopefully scared you, we're going to move on to the next section, which is about really monitoring your financial conditions. And Courtney had that great example of the child flying. Well, I'm going to use an example of a toddler. You can have a toddler, you can be a great mom, and the first time you turn your back, what is that toddler doing? That toddler is in your pots and pans. That toddler is eating dog food. That toddler is climbing up your bookcase to get to something on that top shelf. Much like your financials and a toddler, you have to be paying constant attention. The minute you turn away, in all likelihood, your financials are going to be getting into some trouble. So it's great what Courtney said about those policies and procedures is so critically important. But the more important piece is following them and ensuring that you're adhering to them. And that likely is a lot of times where organizations fall. They spend hours and hours developing these beautiful policies and procedures. They put them in place and they never go back and review them. They never train new staff when they come on. They get a bunch of new grants and they have 30 new employees and they never go back to those policies and procedures and see, do those role-specific things that we've assigned in there, are they still appropriate? Can we broaden them? Are there other people? Your financial condition is a living, breathing thing, and it's really critical that you look at that all the time. So we'll go on to the next slide, and we're going to look a little bit around basic leadership responsibilities. So we're going to divide these up between you as the leaders within your organization and then some responsibilities that are specific more to your board. But these are some basic leadership responsibilities of your project office or your project director, of your CEO, of your executive director, whoever are those main people in control of your organization. You should be sure that you are conducting regularly reviews of several things, of all your monthly statements. You should see bank accounts. In fact, within our organization, no one opens the bank statement but me. So while we have other procedures as who opens other things, that bank statement is on my desk and I open it and approve it. So, and then I review it, make sure it looks all right, and give it to the bookkeeper to then reconcile. Credit card statements. I cannot tell you, Courtney sort of alluded to it, but if you have credit cards, we have had centers who give credit cards to their regional staff throughout the state and have found where staff have gone to Walmart and bought personal food or things for their families on the agency credit cards. Credit card fraud is huge. And quite honestly, you can have the most wonderful internal controls. We have strong internal controls with our credit card, and yet in reviewing of the statement, we found purchases in Central Florida when we hadn't traveled there. So you can still have fraud even on your credit card, so looking at things like that. Regularly reviewing your investments. Hopefully that your organization is strong enough that you have investments and you're reviewing those regularly. Keeping track of your cash flow. Making sure that if you pay people on the 30th of the month, that you're not short and you're going to be able to make payroll on the 30th of the month. Really keeping track of your payables and your receivables. So those payables are all those bills that come in and get entered into the system. Are they getting paid on time? Are you avoiding late penalties? Late penalties of $5, $10, $15, $20 will eat up money and are really more of a result of internal issues rather than bill payments also usually. Receivables. Are you invoicing, if you have others besides your federal grant, are you invoicing your other contracts and grants, and are you getting your money back in an allowable and reasonable amount of time? Really taking a look at your general ledger and chart of accounts every once in a while to make sure there's nothing hinky. And I am absolutely certain that hinky is a word when we talk about financials. Are your chart of accounts set up enough that you can distinguish your budget items? Are you in your general ledger? Is anything missing? So I might pull the general ledger and look and see every month, do we have an insurance bill come in and has it been paid? Those are things that you can look at when you're looking at your ledgers and chart of accounts. And really looking at your budget. And when I say budget, I mean budget in terms of a fund statement that looks at profit and loss on a monthly basis, on a year-to-date basis, and then overall, to make sure that you as leadership understand the financial situation that your organization is in. This includes if you are incredibly healthy. This includes if you are if you're very worried about the financial situation of your organization. It says regular, and regular is determined by you. I would say internally within an organization, even if you are churning and burning and doing wonderfully, the regular.
Oop. Debbie, I think we lost you. Debbie, did you go on mute? Okay, well, we will wait for Debbie to rejoin us again, but we'll keep moving through the slides here. Continuing on with basic leadership responsibilities. Oh, are you back, Debbie?
I don't know. Am I back?
Yes, you're back.
Goodness, I don't know when I left off. So should I just keep going on the slide?
Yeah, perfect. I just flipped to it, so I haven't started anything yet.
Well, sorry, everybody. Not sure what happened there. Other leadership responsibilities that you have is that you have an obligation to keep your board fully apprised of financial situations. So sometimes if you have cash flow issues and you're not going to be able to make payroll, but you have you can draw out of your investments, these types of things. If a contract isn't paying, so we just discussed, if you have a contract and they're 3 months behind paying, this is something that the board needs to know. Might be a perfectly legitimate reason and it might be okay, but it's still an oddity that the board should know about. If a contract gets delayed in being brought to you, if a grant is ended early, if your investment just totally stops making money and it's losing significant amounts of money. But also consider who needs to be told this within your board. So larger boards often have a finance committee. That might be who you're going to with information. A lot of times it's your board president and your board treasurer who are the ones who receive this information, particularly in between board meetings, but also in terms of the gravity of the situation. If you just can't meet payroll because one of your contracts hasn't paid and you know the check is coming next week, so you're just going to draw out of your money market and then reinvest the money, it might be okay just to let your board treasurer and your board president know, but it might not. But these are discussions you should also be having with your board to find out how involved in some of these things do they want to be and what does that involvement look like. But active discussions about this really make sure that you as a leader are leading the organization around the financials. And Courtney, you can go on to the next one. So now let's switch over to a little bit of looking at what boards have to do. Boards should regularly be conducting reviews. So by regularly, whenever you're meeting, if you meet quarterly, great. If you meet monthly, great. If you meet bi-monthly, but whenever there is a regular meeting of the board, they should be reviewing the budget in terms of a fund statement, a profit and loss statement. A lot of these have different words, but what you're doing is you're showing them the year-to-date expenses and income. It might include year-to-date variances, so where are we under with income or over with income, and expenses the same thing. It should have an annual comparison. If you're 6 months into your annual budget, have you expended roughly 50% of your expenses? Is your income at about 50% of what you've expected? That's what we're looking at when we're talking about variances. And do variances make sense? Are they explainable? So for our organization, we pay all of our insurance up front in the first couple months of our fiscal year. So when we look at a variance, right away in the first month of we've only used 1/12 of our budget, we're only 1/12 into the budget, but we have expended all of our insurance money. It is very easily explained. There's nothing else going to come in. This is going to ride out and smooth out as the year goes on. We buy everything up front. Totally explainable. A contract is coming in late. As soon as we get it and signed, we'll quickly invoice for those past 2 months, and that will catch that up. Make sure your variances are explainable. And if they're not, then it's time to do some digging and really looking into why. Boards should also see balance sheets. And I will tell you that in my experience, balance sheets provide the best overview of the health of your organization financially, but they're also the hardest sheet to get volunteer board members to understand what they mean. So basically a balance sheet, you're looking at the assets that your organization have versus the liability that your organizations have. So assets would include any prepaid expenses, which might be you put a deposit down when you signed your lease. Assets might be if you own your building. Assets might be, and it would include then what part of it you own. Assets might be money in the bank account, your investments, that sort of thing, versus liabilities. Liabilities would include your payables at a particular date. Liabilities would include any leases that you sign. So if you closed up tomorrow, legally you're still obligated for the 5-year lease that you just signed. Vacation accrual from staff. So if you allow your staff to carry over vacation time, if you close tomorrow, how much would the agency have to pay staff to pay out their vacation? So these types of things are all on a balance sheet. I would strongly encourage you to bring in someone that can help a board member or help the board in general understand what they're looking at a balance sheet and why it's really critically important. Because to me, again, it's the biggest overall picture of your health and the direction that your organization is going in. So the budget really provides a little bit more of the detail of how we're running in a year. The balance sheet is even bigger than just a year. It's looking at the health of the organization. And quite honestly, anything else that the board would like to see, they can ask to see. Some board members ask to see bank statements. That's okay. You want to be, as a leader, as transparent as you can be with your board by providing them the information that they need to be and making decisions around governance of the organization. Now, there's a balance there between governance and actually operating, and that will be determined between you and your board, and hopefully that there's not any sort of issue in there. But boards do have a responsibility to make sure that they're paying attention to those things. So let's move on, and let's now that we've talked about all the scary things of a toddler, let's go to the audit. Nothing usually scares people more than thinking of having someone come in and really review your books and be digging into things. But audits do not always have to be a scary experience. You want to be able to monitor your financial condition, and that's what the audit does. So these are triggered differently. What's required is differently, but it's triggered when a nonprofit receives federal funds, and federal funds are all combined. If you have a grant from Health and Human Services as well as a grant from USDOE, that's still all considered federal funds. You might have a contract with your state, and it's passed through federal funds that come to you. You will have to check that out. And also when a nonprofit expends more than $750,000 in federal funds in a year. That threshold has been raised. So for a lot of you, you just went, whew, absolutely not me, and that's great. But when you have to have the most rigorous audit is when you get to this. So let's look at the next slide, which goes into that a little bit more in detail. So again, we talked about this single audit. The single audit is the $750,000 threshold that went into effect at the end of 2014. So at this point, everybody's operating in a fiscal year that had nothing to do with 2014. So if you have more than $750,000 in federal funds, either through pass-through from your state or even local entities, or direct grants and contracts that you may have with the federal government, you have to have this A133 audit. So it is much more rigorous. It is much more expensive. Guidelines pretty much say if you don't expend that much, don't pay for that level of an audit. However, what I would say is even if you're under that $750,000 federal fund threshold, it is still good practice to have just an audit done. You can still bring in an independent set of eyes to look into your books. It is not as rigid. They are not going to ask all of the questions, but they will look at your internal controls. They'll look at your books and make sure that things look like they're coded the right way. They're not going to catch every mistake, but you can get a general audit done for significantly less than this A133 audit, and it does give you some peace of mind that someone external outside that is not involved with your organization is looking at your financials, which in the nonprofit world is always best practice and probably always a good thing, no matter how big or small you are.
Yeah, so Debbie, I'm sorry.
No, go for it.
I would just add to that you know, when you're looking as a center at applying for other sources of funding, whether it be through local or more national foundation dollars, or you know, wherever you're going seeking funds to diversify your funding base at your center, many of those entities not only like for you to have audited financial statements, but they require that you have audited financial statements. So not only is it just good for ensuring the health of your organization, but if you are looking at alternate funding sources to supplement or enhance your center's work, sometimes it's going to be required that you have that audit or some level of audit done at your center.
It's a really good point. It's a really good point. So when we look at it, and when we're talking about audits, Courtney, you can go on to the next slide. A couple of things that we would recommend. Get your audit done on time. Even if you're just doing a general audit, make it automatic. So our fiscal year ends in July. And we know in August or early September, we are having an audit done. Now, we fall into that A133 most rigorous audit, so we absolutely know it's not a choice for us. But even before we hit that threshold, our organization felt it important enough that we conducted a general audit. And we knew every year in August or very early September that we were getting it done. So if you start making it an automatic thing, just part of your financials, it doesn't feel separate from the other internal controls and policies and procedures that you're following. So you want to make sure that once you finalize that year, you're getting that scheduled if that is the thing that your board and you as a leader of the organization opt to do. So you want to bring auditors in, allow them to do their field work, allow them to complete their work. Make sure you thoroughly review their draft. They are not financial perfection. We will find errors in drafts. We will find where things don't match up from previous years and see where some issues might be. But make sure that you reviewed that draft with the board and the board accepts the audit. It's not an approval process. They're not approving the audit. They are accepting the audit as presented. So you can see there's actually a typo on the slide where the slide says the board approves and finalizes. That's actually not true. The board accepts and the audit becomes final. So get it done and submitted on time. What the federal government says is you have 9 months from the end of your fiscal year to get this uploaded into their clearinghouse if you are required to have that A133 audit. If you are not required, best practice still says get it done within 9 months, but you have no obligation to upload it and make it official. But do make it available to public and other funders. A lot of times, if you are competing for a grant, like Courtney used her last example, and you're the final two and it comes down between an organization that does get an audit, which is you, and an organization that doesn't, that might be the determiner because you are a little bit more financial transparent than an organization that opts to never do an audit. So let's switch into what we think is sort of our last section of the training and looking and understanding your financial health in general. The biggest recommendation that Courtney and I would give to you today is that this has to involve regular and ongoing training. It is okay to admit what you don't know. I will tell you, when I took over as an executive director, I'm a special education teacher by trade. That's what my degree is. That's what I did. I fell into the nonprofit world and through a crazy, convoluted situation, ended up running an organization. Other than balancing my own personal checkbook, I really did not have financial management experience. It just was not in what I was doing. So I had to admit very honestly what I didn't know, and that's okay. Make sure that you're investing in training, both of your board and your staff. So you might go, oh my gosh, I've got a staff of 3. Why in the world would I need to train them on this? Because when you have such a small staff, you need everybody's eyes on this. It takes one, even potentially innocent mistake to change your organization and even potentially shut you down. These are mistakes around financial issues you just do not want to make. That's why it's critically important. Consider contracting with a CPA to kind of come in and help do those trainings, make recommendations for you, review your policies, review your procedures. Are they on point? Could they help us look at how we do our credit card bills? Is there better documentation we can provide? Can we make our controls stronger? How can we do this? CPAs, especially those that have nonprofit experience, are great people that can come in. And a lot of times through your state nonprofit organization, like your Centers for Nonprofit, you can find CPAs that will do this for free or at a drastically reduced rate. So these are things that you can consider. And really encourage people to ask questions because it's really okay to not know everything. I will guarantee you that probably by the time you're listening to this, Courtney and I have made some other mistake around our financials and learned another life lesson that we will impart as we continue to do these trainings. Make sure you're training regularly. It's not a one and done thing. As you're bringing on new board members, as you're bringing on new staff, again, I go back to the toddler. As soon as you turn away from it, likely bad things are going to happen. You have to have that supervision piece in place. So once you do a lot of training, what else can you do? Make sure that you're monitoring your policies and procedures. Whose responsibility ultimately is it to do that? How often do you do that? Do you really look at them? That could be something that the board dictates to you and says, we would like to review those policies once a year. Or that could be an internal thing that you as the leader of your organization put into place. And I will also say that a lot of times when we do these trainings, we hear, I'm the PTI director. I'm not the CEO. This isn't related to me. This absolutely relates to you. That last slide that I said, ask questions, if you are not the CEO or are not your executive director, you as the PTI director need to make sure that all of this is in place for your organization. So that bullet point on that last slide about asking questions becomes every bit as important to you as it does to anybody else within the organization. Organizations cannot go, oh, financials, not me. Financials are everybody within that organization. So again, going back to who can be trained, who can help with this, especially for those smaller organizations. What are the strengths that you have around your financials and what are your weaknesses that you have around your financials? And finding ways to train to those topics. Your training needs might change. As your organizations grow, and you're monitoring your policies and procedures, you might find that you have to do more around investments because you have more liquidity and you have these larger pools upon which you could do something really creative for your organization. These are all things that come when you're really paying attention to your health and you go, wow, we don't have this in place. We could do this for our organization. How and when do you need to beef up your financial department? So how you might have one bookkeeper. If you're really small, you might have someone that works on your books 10 hours a week. If you're really big, you might have a financial department that has a bookkeeper and 2 assistant bookkeepers, and then an executive assistant that's assigned to them as well. When is it time to add staff? When is it time to update your software? When is it time to change from to a paperless model, and what's all involved with that? These are all questions that should be spinning around in your head. So when you look at, thank you, Courtney, for moving along for me. What does the board need to do to consider the financial health of the organization? What are internal controls that the board could help you improve upon? The biggest, most critical thing that a board needs to be considering are some of these other 4 things that are on that screen. How do I build funding? As a board, I need to make sure that I am sustaining the funding that is available and expanding the funding to make sure that we are addressing the resources that we need. So very rarely do you find that a PTI or CPRC grant covers everything that you want to do as an organization. So how do you build funds? How do you diversify your funding? How do you sustain your existing funding? Let's be honest. Federal and state funding is likely shrinking. I certainly have not got an increase in our PTI grant in several years. In fact, what we have taken is decreases while the workload is increasing. So the board needs to have an understanding of all of that to make sure that they are making best financial decisions for your organization. And how does the board ensure transparency? The minute you start clouding and shrouding around your financials is the minute that more people are going to want to dig. You have to have an air and an acceptance and an atmosphere that your financials are transparent. And if people want to see and ask questions about things, that you will provide and answer questions about those things. So how does the board support the organization in doing some of that? So when you think about the board, also we need to think about individual members on that board. So as an individual member, do I really understand what the financials mean? Am I comfortable asking questions? What other information do I need to see to understand the big picture of the organization's financial health? And how, if I'm a CPA on the board, how do I help others understand them? If I am just a long-term board member who's now a year away from stepping off because I'm in my second or third term, how do I help that brand new board member that comes onto the board understand things? I have sat in board meetings where a board member said, I move that we accept the financial statements as presented, even though I don't understand them. That is a very, very bad situation to be in. You need to make sure that you're understanding the financials, and if you don't, do not vote on them as a board member. How do we improve the viability of the organization? What's my role in that? That can come around fundraising. What's my role in diversifying the funds for the organization? If we lost funding tomorrow, does your board understand how long your organization will last? A lot of boards say, oh, if we lose the PTI grant, we just fold up. As a board, are you comfortable with that? As the leader of the organization, are you comfortable that that's the stance that your board has? I would hope not. I would hope that you're thinking about how you can grow and diversify to make sure that you're an organization should you lose your PTI or CPRC funding. How can we do better? Always asking how we can do better. You can have the best policies and procedures in place, but I contend that there's always something more that you can do. So the last slide about really understanding board and financial health is really, again, thinking about a lot of these things that we've just covered. Courtney, if you want to move on to the next one, please. Fundraising, marketing, outreach, contracts and grants. Really making sure that as a board you see your role in that. So many times boards go, oh, we need to contract with our state DOE. That's the responsibility of the executive director, or that's the responsibility of our PTI director. Is it really? And if it is, how can you support his or her efforts to do that? How do you as a board member market and outreach to people in your community? If as a board, you are, as a parent center board, you really do represent your service area, how are you, whether that be your state or your region or small community, how are you helping that organization get deeper embedded into that community or deeper embedded into that part of the state? So really thinking about all of these and really making sure that you have a go-to person on your board around financials. So you might have the perfect CPA. They've been on the board 8 years. It's time for them to rotate off after next year. Your bylaws say they can serve 9 years. Who's the replacement? Who's going to fill those shoes? And making sure that that person has enough time to get in and be oriented and ready as a full-blown board member before the other steps out is the responsibility of the board. And active contributions on a yearly basis. And yes, that active contribution might be very small for some board members, and that is okay, but really making contributions on a yearly basis as a board member. And that can look many different ways. So I think we're on to our third case study, Courtney, and I think, again, I will read and I will let you, because they've heard from me a lot lately, so I will let you be the one to answer this. So we're back to the ABC Parent Center, the one that we did, the first case study that I read to you with the strong internal controls. The cash flow has been really tight. One contract with the state is 3 months behind on payment, and the federal PTI funds are running a bit low because it's September and you're about to go into your new year. The financial manager comes to the executive director and says ABC is not going to meet payroll on Friday. What do you think might be some options right away, and what monitoring could be in place to help this?
All right. Well, I think this situation, first of all, I just want to say is not so far-fetched. Unfortunately, a lot of nonprofits and parent centers find themselves in some tight financial situations sometimes. I think the first thing, if I were the executive director at ABC Parent Center, the first thing I would do would be to alert my board. I would start with the president of my board and the treasurer of my board, and conference them in immediately into the situation to let them know what's going on. We here at our organization have the luxury of having some unrestricted fundraised dollars as well as some investment monies that we could potentially tap into. Of course, we can only do that with board approval, so they would need to know the situation. In order to make that payroll. What we don't want to do is to use our federal dollars to cover the deficit that we're running into because our state contract has not paid us yet. We cannot use our federal PTI or CPRC dollars in lieu of other monies just because we don't have those other monies at the time we need to expend them. So that's something we don't want to do. We talk a lot with the parent centers we work with about the importance of fundraising, having those unrestricted dollars, those rainy day funds for these very situations in the event that you would have to dig into something. In terms of monitoring that could be put in place to help with this, boy, a couple of things come to mind. First and foremost, if you are managing and you're really keeping a close eye on your cash flow and your available balance, monthly, here at our office, we look twice a month very carefully at what we have for available cash flow so we don't get ourselves into a pinch like this. So I think there needs to be greater monitoring of the cash balance and the availability of funds. Certainly if you were monitoring and you noticed, if you were monitoring, you would have noticed that it's been, several months since you had received the monies from your state contract. I would hope that a contingency plan could then be put into place. Unfortunately, things like this happen. They happen frequently with state contracts. We've been in this situation, and without the availability of unrestricted dollars or investment funds to be able to use to cover the payroll, we've actually, unfortunately, had to, or we would have had to laid staff off because they should not be working if you do not have a source to pay them. But again, if you were monitoring things more carefully, you would have caught this. Hopefully not the week of payroll, but several months back. So I think that monitoring, developing a contingency plan is really important in this situation. Being really proactive, working with your funders so that they understand we don't have the resources to float this beyond a couple of weeks, a month, 2 months, whether it's 45 days, 60 days, and so that your funder understands that should there be a delay in processing your payment, we will have to cease work on your contract until we receive payment. Having those conversations up front with your funders so that when you come to them and say, we don't have any money to pay people, we don't have reserves that we can use, we've got to stop working now, it's not a big surprise to them. I think also if you're in closer communication with your funders, hopefully this won't be a surprise to you if they're unable to pay for a certain amount of time. A lot of times in working with our state, they've said, things are going to be delayed 2 weeks or things are going to be delayed 3 weeks, and giving us the heads up so that we can deal with that. I think probably, Debbie, that's what I've got on that one.
I think that it's probably one that makes people pretty uncomfortable, and I do think it's that pre-planning and knowing ahead of time what you're capable of doing. So again, this is largely because one contract hasn't paid. What is going on? I agree with Courtney. Was it really probably in the best interest of ABC Parent Center to operate 3 months without payment? I mean, how much has his center really had to put up front that now they really can't meet their payroll? However, to me, it's a cash flow issue. So several years ago, we knew that July, August, and September, we were always going to just be, because of timing with new grants coming, or new contracts coming in, the end of our PTI cycle, and funds probably running a little bit low. We knew, and we would always have a contingency plan for what that would be. I've been in other nonprofits where the contingency plan was a line of credit with the bank that you may not touch for 6 or 7 months, but was there and you could rely on if you ever got into a pinch. So this is why really financial planning and really understanding where your organization and the health of your organization becomes super critical, because there's nothing looks worse in the eyes of your employee than not meeting their payroll. And as an executive director, I'm sure that that would pain each and every one of you on the phone that's listening to this, and certainly I would hope it would pain a board member. And quite honestly, as a PTI director, if you've done the work, the fact that you're also going to be included in that really adds to the unfairness of the situation. So it's really one of those sad situations, but it absolutely is something that does happen. It's not out of the norm. You just need to make sure that you're planning for it, because we all face this. We face this in our personal lives, many of us. So I think that I hope that that one sort of drove home the points. We are about to wrap up with some of our best advice and then turn you loose. So we're gonna let Courtney go first with the best advice that she would offer you.
Great. And I think most of this at some point or another we've covered, but transparency is really key. If you operate from the perspective that at any point in time someone may request to see the financials of your organization, if that's the standard that you strive towards, I think for the most part you're going to be fine. It's when we think that no one will notice this, or I can just fix it next month, or oh, we'll shore that up next time around. That's really where you get into trouble. So operate from the perspective that on any given day, a funder or frankly a member from the general public could kind of swing by and say, we want to take a look at your financials. Are they in good enough shape that you would be willing to show them to anyone? The next thing is just don't assume that even your most savvy board members have a lot of fiscal experience. I'm an attorney by trade, so I have sat on numerous nonprofit boards, and they're always really excited to have an attorney, because apart from the thought that they're going to get lots of free legal advice, they also think that I know a whole lot about finances and fundraising and you name it. And I will tell you, I went to law school because I didn't like numbers. So I had a huge learning curve the first board I sat on in terms of what a profit and loss statement was. What are the questions I should be asking? What are variances, and why should I be concerned about variances? How much available cash flow do we have? What do we have in reserves? Those are not things that people outside of our world of managing a nonprofit necessarily have background knowledge of. So ensuring that you are getting your board members the professional development that they all probably want, even if they're not expressing that want or that need to you. Be diligent about review. It's really hard. Our centers are so very, very busy, and a lot of us have positions that are tied almost exclusively to programmatic work. So finding the time to sit down and audit your financial policies can be hard, and something that just keeps appearing on every version of our to-do list. Best practice is, of course, to do it annually. Things change so rapidly, but if you can't swing that, every 3 years is really a mandatory. And I guarantee you, if you haven't done this in a while and you go back and read through what your financial policies and procedures say, there will be a significant amount of head scratching, like, really? That's what it says we're supposed to do? Or oh, that's that's interesting. That's not at all how we handle things. So make sure you're doing that audit and review. And then last but not least, we are all so guilty of this. Oftentimes we have a standard that we are expecting our staff or even our board members to adhere to or comply with, yet we're not providing them with the policy language that governs that area. A great example is, your employee expenses and what you require of them in terms of backup documentation for those expenses. If you have not provided them with language through just directly giving them a policy or in your employee handbook about exactly what types of expenses are, first of all, appropriate for reimbursement, and second of all, what type of documentation you need to have in order for that expense to be reimbursed, don't be surprised if you get requests for some very interesting things with little to no backup documentation. You've got to provide people with the policies, and not just when they start working for you. There are certain financial policies that we go over with our staff sometimes multiple times a year, particularly if it's something that we're having problems having people follow or comply with. So just make sure you're giving people notice before you're scratching your head wondering why you're having such a hard time enforcing a particular policy. That's my advice. Debbie, on to yours.
Okay, so my biggest advice is just be honest about what you do and don't know, and be honest about what your strengths and your weaknesses are, both you as a leader and then in terms of your organization. You can have 6,000 clean audits and think that you're doing everything great, and the minute you turn your back, little things can slip. And sometimes if financials are not always top on your mind, like Courtney just said, things slip. And slippage is not always a bad thing because it can lead to a lot of change and a lot of improvement, but financials need your constant attention. They need your constant attention so that as a leader, you never are faced with that decision that you can't make payroll and you don't have a contingency plan in place. That you never have to go to your staff and go, we have lost our PTI funding, we are closing next Friday, and everybody is losing their job. These are not things that we signed up for when we took our position. No one wants to have that happen. So being really honest about what you do and don't know, sometimes it's really hard to ask for help because we think that we have got to be so perfect with all of the financial stuff, and that's just not true. If you have any wiggle room within your budget, I would strongly encourage you to get a CPA involved in some way, shape, or form. It doesn't have to mean just your audit. Have someone come and look at your policies. Have someone come in and review the month financial statements with you before you close out a month. It really helps a lot, and we do this here in Georgia, and it takes a lot of pressure off of me as the CEO, and it also provides the board a whole level of comfort that they didn't have before we did that. And there's ways you can do it cheap, and there's ways that you can do it even for free. So don't think just because I'm a small nonprofit with a very limited budget that that's just an impossibility, because nothing's impossible if you want to be really creative. Train, 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 and then document, document, document. If you have the documentation in place, it is so hard to question what's going on with your financials. If you train and train and train your staff, you won't run into where there's a policy that they don't know about. You won't run into a board member who says, I'd like to approve the financials even though I don't understand them. And it really does show a transparency that you take this seriously with everybody. And the very, very, very best advice that I would give is use your RPTAC. Every parent center and every PTI and every CPRC has an RPTAC. Pick up the phone, send an email. We're living and breathing this with you. We do this stuff every day, just like you guys do. So we can help you figure out and make improvements. We can brainstorm trouble. We can help you figure out a better segregation of duties. We can help you investigate when you suspect something's going on. I mean, we are really here to help and support you. So if you don't use us to help with your financials, it is a big, big loss to you. And it's certainly something that we understand and are willing to support both board members and staff in those positions. Because the next slide really says it all. There is no lack of knowledge. There is just a shortage of people asking for help. just ask for help. That's what we're here for. And if you take nothing else away after listening to us for about 90 minutes, for those of you who stuck in and really listened to all of this, that would be our best advice, is really to reach out to your RPTAC. Because at the end of the day, and this goes to the very final slide, this is what we want you to feel like around your financials. We don't want you to feel like the horror story woman from the audit slide. We want you to feel like you are powerful, like you are in control, and that you have a source of help if you need. So we very much appreciate you taking the time to listen to this. We hope that you found it abundantly helpful, and I'm going to turn it over to Courtney to close for us.
I think that's a great closing. So thank you for your time and your attention. And again, please do feel free to reach out to your RPTAC with any question. And in particular, with the financial questions, ask earlier, even if it's something that you're afraid isn't going to make your center look very good. The earlier you seek help, the better off the outcome is going to be for your center. So with that, I will stop the recording and wish everyone a great rest of the day.